Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial jargon that most people just skip over. Yes, more warrants, let's see what this actually means. Before we dive in, if you find value in these breakdowns, hit subscribe so you don't miss out. And join our Discord community linked in the description below for more discussions. So today we're looking at a Form 8K filing from 5E Advanced Materials Incorporated. These 8K reports are filed when big important stuff happens to a company that investors need to know about right away. And what happened here on the 7th of January 2026 is pretty interesting. This filing is all about some new equity agreements that 5E Advanced Materials Incorporated entered into. Think of equity as ownership in the company. So this is about them potentially issuing more stock or things that can turn into stock, like warrants. The main point of this report is to tell us about unregistered sales of equity securities. Now, unregistered might sound a little scary, like they're trying to hide something, but really, it just means they are following a special rule that allows them to sell these securities without going through the whole long and expensive process of registering them with the government. This is usually done for private deals with specific investors. It all started back in December 2025 when the company's shareholders gave the thumbs up to a potential funding deal. This deal involves a $10 million funding package from the Import Bank of the United States, which is often called the EXIM loan. To get this loan, the company needed some extra help, some guarantees. And that is where the 7th of January agreement comes in. The company entered into a letter agreement to issue warrants. A warrant is basically a contract that gives someone the right, but not the obligation, to buy shares of a company's stock at a specific price for a certain period of time. In this case, the company agreed to issue these warrants in exchange for these special investors, referred to as the guarantors, agreeing to provide a guarantee for that $10 million EXIM loan. So the investors are essentially saying, we'll back this loan for you, and in return, you give us the chance to benefit if your stock price goes up. These warrants have an exercise price, which is the price at which the holder can buy the stock, set at $3.5507 per S-share. This is important because if the company's stock price goes above this number, the warrants become valuable. The total value of these warrants is tied to that $10 million loan, meaning they could potentially buy up to $10 million worth of stock. The maximum number of shares that can be issued through these warrants is a little over 2.8 million shares. These warrants aren't going to last forever. They will end either 2 years after the EXIM loan is fully paid back or when the guarantee is cancelled, whichever comes first. This is where the unregistered part comes into play. The company is saying these warrants were offered and sold in a private placement, meaning they were sold directly to a select group of investors, not to the general public. This sale is exempt from registration under a specific part of the Securities Act of 1933. Which is a common way for companies to raise capital without the hassle of a full public registration. Here is a key point: if the company doesn't actually get the $10 million EXIM loan, or if the investors don't end up providing the guarantee, then these warrants will basically become worthless. They won't vest or be exercisable, meaning the company won't have to issue any stock for them. So, the value and existence of these warrants are directly linked to the success of securing that EXIM loan. Now, let's look at the bigger picture here. This filing tells us that 5E Advanced Materials is actively seeking funding and is using equity incentives, like these warrants, to secure it. The fact that they needed warrants to guarantee a government loan suggests that either the loan itself is crucial for their operations, or that the loan carries significant risk requiring robust guarantees. It is a bit of a gamble though, isn't it? They're giving away potential future ownership to secure a loan that might not even happen. If the loan falls through, these warrants will have been issued for nothing, which isn't great for existing shareholders as it could dilute their ownership if the stock price were high enough at that point. On the flip side, if the EXIM loan comes through and the company's stock price rises significantly above that $3.5507 exercise price, these warrants could be quite profitable for the investors. This could mean a substantial amount of new shares entering the market, which could dilute the value of existing shares if not managed carefully. Looking at this from a broader perspective, it suggests 5E Advanced Materials is likely in a growth phase where capital is essential, and they are willing to give up a piece of the pie to fuel that growth. The success of this strategy hinges entirely on the successful acquisition of the EXIM loan and the subsequent performance of the company's stock. The risk is there, but the potential reward for the company, if the loan materializes and their business thrives, could be substantial. This is a classic scenario of a company leveraging financial instruments to achieve strategic objectives. The key takeaway here is the high dependency on the EXIM loan. Without it, this whole warrant issuance becomes a Even with it, it could lead to significant future dilution and a potential boost in cash flow. Only time will tell if this was a smart move or a costly one. Alright, that is our breakdown of this 8K filing. What is your take on this warrant deal and what it signals for 5E Advanced Materials' future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives like this. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.